Good evening, everybody, and welcome to tonight's edition of Live Market Analysis. I really have to think now because I'm doing the Monday night sessions for you, private group, and then the Wednesday sessions where I say Chart Watch Live. And you might have saw me on Wednesday pause as well at this point because I'm going, where am I? What am I doing? But we're certainly live market analysis because it's Monday night. And of course, it is an absolute pleasure to be with you talking markets tonight. But before we get into the nitty gritty of tonight's presentation, let us remind ourselves that everything we're going to discuss is general in nature, has not taken into account our personal circumstances, your personal circumstances either. And before you act upon any of this general information, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information that disclaimer is important, but the most important bits, of course, are the bits where it says you could lose money. Trading, investing is risky. You will endure losses at some stage. Please understand it will happen to you. Ultimately, it's you and not I is responsible for everything that you do with your money. Hey, apart from that, of course, let's put that to one side and get into the nitty-gritty, which is where you ask questions, and hopefully I can provide some answers where you might maybe learn something new. Some of you have been coming to these for years now, literally years. And my goal each time is hopefully just put it in a different way that just maybe clicks. Actually, I didn't know that last time, or now I know it better. That's my goal for tonight. Hopefully your goal is somewhere along those lines. Let us head to the Amy Broker screen, and we're going to do our portfolio management model first, which determines how much capital we can risk if we're trading in the Nasdaq. Hey, if we're trading in the Nasdaq and Australia, let's say, for example, we had $100,000, aren't we lucky? And we were investing $50,000 in the Nasdaq and $50,000 in Australia. This would determine how much of that $50,000 we could apply to our US trading, the Nasdaq being our poster child, our benchmark for the US stocks. And you can pick a different benchmark if you think if one is better. But I think we all agree after doing this for years that the Nasdaq actually is the best benchmark for US stock trading. It is the center of the bullishness of the risk taking in the US. So now risk taking, it's happening, and that's a good thing. We want to see the cash not want to be cash. At the end of the day, is that we want cash to not want to be cash. We want cash to be shares, to be risk, because that's what shares are, ladies and gentlemen. They're big balls of risk. Doesn't matter if you think you've got the most bluest of blue chips. The investing community sees stock as risk. Okay, they see things like cash as safety. They see things like bonds, high grade government bonds as safety, but they certainly see things like stocks as risk. Okay, so when we see double green trends here, light green is the short term, dark green is the long term, we're seeing an appetite for risk. So cash wants to be stock, and stock that's already stock doesn't want to be sold to become cash. Okay, remember, cash is the opposite of risk. Cash is safety. So the people with cash, they want to get into risk, and the people who are in risk already, remember the stock, they want to stay there. I think that's a really neat way of looking at it. Price action is our relative position of our points of supply. They're the up pointy bits, and our points of demand, they're our down pointy bits, and the up pointy bits are sort of tracking along nicely higher than each other, and the down pointy bits are also tracking along higher than each other. It tells us we've got supply removal and demand reinforcement respectively. We've got buy the dip activity, and we've got lack of trepidation at previous highs. Think about what that means when we make a new high quite casually. It's a lack of trepidation to make new highs. That's pretty special. That again indicates risk-seeking activity, and when we pull back, we're buying the dip. That indicates risk. So, you'll hear me talk ad nauseum all over and over again about trend ribbons and price action and all of this stuff, but it's rooted ultimately in the management of risk, or the market's management of risk. And of course, the candles, they're really important because the candles tell me about where the buy orders are situated, the pervasive buy orders, the buy orders that ultimately move markets on a second by second, a minute by minute, a day by day basis. We look at them on an end of the day basis in our candles. And white candles mean pervasive buy orders. They're just dripping cash into the system constantly. If you've got lots of black candles, the opposite. that we're now converting back the other way. I don't know if you have Life 360, if you've got teenagers or young adults that you want to keep track of, you've got Life 360, and you can tell that some members of my family are leaving our abode, and that's the Life 360 users will know what that means. Let us head now to the ASX 200, because that's our hypothetical other $50,000, isn't it, where we're investing. And we have been at 2/3 risk position here. Now, don't make me work out what 2/3 of $50,000 is. Or might I say it's about $34,000? Am I right? Pretty close. Let's round it up and say $35,000. So we're allowed to have about $35,000 invested, $15,000 in cash. And it does sound quite conservative, doesn't it? Especially considering how much good stuff there is here. So sometimes we will understand that there are times to push that limit because we're not really investing. Let's face it, we're not really investing in the ASX 200. Maybe the ASX 200 isn't the right benchmark for us. Actually, this is a really interesting thought. I wonder if I've got them here. I wonder if you know where I'm going. I don't have them here. I mean, we could go to something like the All Ords, 500 stocks, but still very much beholden to the top 20. I mean, if we're looking at the ASX 200 versus the ASX, not as much the Nasdaq, still heavily market cap weighted, still heavily skewed towards the big ones. But the ASX 200 is far more concentrated. And I'm in the wrong place, and I'm hoping I have them here, and I reckon I will. I'm stalling a little bit. I wonder if you know where I'm looking to go. That's where I'm looking to go, the Small Ordinaries Index. Now, can I get a thumbs up or a thumbs down or maybe a question mark? I don't know what emojis you have there. But yes, there's a few thousand. This is probably our, as in mine and yours, better indication of a benchmark for the stuff we're doing, because you're probably finding more and more and more that your risk capital is being allocated in the smaller end of the market. It's not always the case. Quite often, there is a decent overlap with the ASX 200. It's just not the way it is right now. So it's not a matter of saying, let's not use the ASX 200 as a benchmark anymore. I think that's silly. Most of the time, that's right. But we will go through periods where fund managers, the funds shift. We know it's a small market, and therefore these waves of capital have a larger impact. So this is probably the better benchmark to look at for the time being. There's also a mid-cap one. I don't know if I have. Oh, I do. I've got a mid-cap 50. You can see that's better than the other one. A little bit. Well, actually quite a bit better because it's actually pretty close to the high, isn't it? So you can see as we're getting out of those, top 20, top 50, top even 100 stocks, we're actually getting a better understanding of what's going on. And you can't necessarily go to the All Ords or the ASX 300 and think you're going broader. You're certainly going broader in terms of stocks, but because you've still got those big ones in there, you're kind of stuck. When you get to the Small Ords, you've taken out the big ones, okay? And that's kind of the critical factor. So these are not hard to find, and you know I'm in Amy Broker, but I'm sure you can get it on your trading view. So let's just keep an eye on these now, perhaps just until this small cap surge runs its course, and then maybe we'll default back. But we probably want to keep an eye on both of those. Long story short, and we've made it a very long story, haven't we? So here's the short bit. You'd be FRP here. If this was your benchmark, you'd have every single dollar invested in the market. If this was your benchmark, the ASX 20, look how much worse that is than the ASX 200, which we'll go back to over here. So we're starting to see, look, actually the benchmark does make a difference to how you treat your overall capital. But I'm sure most of you are not abiding by this 2/3 business because you've seen too much opportunity. That's another important thing to say as well. 2/3, but getting better. Today's candle's impressive. I didn't do an update today, public holiday over here in WA, celebrating King Charles's birthday, of course. Anyways, I would have told you, look, that's a good candle, that's encouraging. The old tin pot is starting to show signs that maybe it wants to continue its bull market and stuff around too much longer. So that's good also. In fact, if we closed above the 4/8s there, I'd probably go back to an FRP anyway. Let's do a super quick whip around the grounds just to see if there's anything to push us off this thesis of pretty much FRP, isn't it? Let's go to the CAC in Europe. And again, we're not going to add to, infinitesimally small elements of analysis here. We're just saying, look, is it something that could be a problem? No. Does it look great? No. But is it a problem? No. Euro Stocks 50 actually looks pretty good. I'm not sure how the CAC and the DAX aren't looking great, but that one looks good. It probably means the FTSE's looking pretty good, and actually Spain looking very good there. And we are not seeing anything to push us off this thesis. And I'm moving quickly now. Even that, who cares? And that's all good. And that's all good. And that's all good. So we're pretty happy. Just quickly do sectors, and this might give us some hints as to where some of that capital is sloshing. But again, more at the big end of town. Discretionary is okay. Energy is starting to break down. That's a bit of a concern. Financials is okay. Today's candle makes it okay. Otherwise, it would not have looked good. There's your small cap index, isn't it, really? It's the gold sector that's running hot. Healthcare, not great. Interesting candle today, though. Information technology, both of those fairly flat now. Interesting in itself. I noticed Zero has rolled over. WiseTech is also rolling over, so that's quite a big chunk of that index. Materials being dragged up by these small caps, and even BHP and Rio starting to come to the fore a little bit. Resources the same. Property neither here nor there, but starting to look a little bit iffy. Staples in the doldrums. Telecommunications okay, not great. Utilities okay, not great. And we're back now to the all ords. Okay, let us quickly do the base metals and keep moving through. Aluminium, it was starting to actually look very, very good there. It's just pulled back a little bit still, I guess, in short-term trend. Long-term trend is still good. Copper, actually nice little pop there on LME. We saw a big move in US copper as well. So that's a sector that we can certainly pay close attention to. We've seen the WIRE, WIRE ETF come up several times. I mean, probably a dozen times it's featured over the last couple of months, so some of you probably on it. Heading to nickel, not great at all, but at least it's not plummeting like it was. Same with lead, tin's okay, and zinc's pretty good actually. So again, no red flags there. Lithium carbonate looking like, I've said this, a bump along the bottom or an equilibrium, a neutral phase, and that's what it's in now. But it's settled substantially higher than what it was, and that's a positive. We certainly have to acknowledge that. Okay, let's head over to the futures now. We'll do things like silver down here in precious metals. So taking out all of the impediments that were in front of it, and just slicing through them like they weren't there. Let's head back to the monthly chart. I think is the best place to go to see where we might be headed next. We've got a couple of lines there heading in an odd direction. I'll fix those offline. 52.77 really is the next level, and with some pretty substantial white candles, it's doing it in a hurry. So I can't see any reason not to stay full risk position on silver if you're that way inclined. Let's have a look at platinum and palladium. They're starting to look good. Also, there's palladium. There's platinum, not as good. Palladium certainly better. And of course, gold continues to win the race, doesn't it? Pun intended. I talked about US copper getting a move on. Pulled back a little bit. Sorry, let me fix that. Pulled back a little bit. But just vibrating, I think, inside that old point of supply and the moving average ribbon, and that downward pointing shadow into 472.60 is a good sign. And we've had a probe here, long-term uptrend ribbon doing its job, of course. And if we close back above it, then I think actually some good things might happen here also. That's disappointing. I didn't see that last candle just with the break, but that's iron ore, I guess, isn't it? It goes nowhere very fast. We have been tracking an improvement in uranium, so that's always nice to see there. To be fair, I think I called that quite early. Natural gas in the doldrums, energy sector we saw earlier on rolling over again. Brent and West Texas, not terrible. And even the coal contracts, you would say, not as bad as they've been. So no really urgent signals, I think, in any of those. Let us quickly round off this whip around the grounds with the bond market. And ideally what we see here is not much. We don't want to see it going up a lot. We don't want to see it going down a lot. You can see my wife has come back home from dropping off one of the two teenagers, the domestic Uber service that we run here most hours of most days of the week. 2 year, but number one has got her learner's permit, and I was driving around with gritted teeth and fingernails dug into thighs and things like that this morning. That was fun. So we go into bonds, and we're seeing that what I wanted is happening, which is not a lot. A little bit of a roll there after the last Fed meeting and Powell's comments that really he's in no rush. Yes, they're cutting rates, but he's not anywhere nearly not anywhere near as an aggressive mood to continue to do so as some might have thought, or that the Fed might be forced to do. As long as these are doing nothing, then we're all good here. We've seen a bit of a pop here because we had some worse than expected CPI data, and markets have factored out one full rate cut. This keeps grinding higher. I've said in the past maybe that's also why the Aussie market's been a bit of a dud, because we've always the yen has always been a funding currency for investments in Aussie dollars, or it has been for the last 30 years. Nothing sinister there. Let's keep moving now and do your offline requests, which I have got, I'm hoping, or I've lost. Have I lost it? No, I've got it. Here we go. Didn't get a chance to put them in the usual place today, as I was running a bit late, but I have them elsewhere. If I zoom that out, maybe I can see the damn things. Okay, Mick's got ASB. Heading back here. And going to All and ASB, which I think had a bit of a pop today. Yeah, it did. And look, there's no reason to be turfing the baby out with the bathwater, but there's a bit of damage done here that we kind of have to acknowledge. So I'm talking about lower peaks and lower troughs, close beneath the short-term trend ribbon. Short-term trend ribbon has changed colour. It was doing actually a pretty good job of acting as a zone of dynamic supply. Let me escape that because I'm just trying to figure out where those last little key points are. So there is actually one here, and we actually made another little low there, didn't we? Another little lower trough, and we've come up to here. So it's selling a little bit of the dummy. Today's candle is constructive, don't get me wrong. It's important. But I think we also have a really good zone here now, don't we? A go, no-go zone for this trade. Happy to entertain it. I don't think we would have been, in all honesty with ourselves, able to run full risk position up to this point. I think the candle that, the problematic candle is that one. I think if you went on that one, you've been way too nervous, Nelly. And I know hindsight's a wonderful thing because you have to tune this out of your brain or turn this off in your brain, because what we don't want to do is automatically see that candle and go, oh, that's where, look, if I don't have this one, but that's where I would have got out. No. if that's the only candle you had, and you're telling yourself that's the open and shut case, Your Honour, I rest my case, I should be taking risk off the table on that candle. Let me zoom out the pedigree of this thing before that. And there's no round numbers up there. I think you're being a bit pedantic. And it's too easy to say, well, Carl, obviously that was a good place to take risk off the table. But no, I just think that's too much. I think that the next candle is starting to be more of an indication, because certainly that is an important point of supply. No doubt about it. That candle there, that one there, is an important point of supply. It's disturbing in that it's coming beneath that one. So this is, we all know that this is nothing. Hopefully we're all on that page. That's unequivocal. This is a do-nothing day. That's a do-nothing day. That's a do-nothing day, a little bit frustrated, but 100% do nothing. This is okay, it's fine. It's just pulling back. Tomorrow's going to be an update. But then we get that. We go, okay, well, that's annoying. It's not what we wanted to see. It's definitely got my attention. This is something I have to pay close attention to. But, oh, okay, see, that's a bit more of a problem for me. What's that low there? That low is 785. Today's low did take it out. In fact, it's 785. So even on that day, we're still, I think, going benefit of the doubt. We've still got this. We've still got this. Even here, I'd argue a predominance of demand-side candles. Yes, we've got lower peaks. We've still got higher troughs. Same trough here, because this will be making up the next trough candle. Then we go to the next candle, and now I think we're kind of at the point where, well, I kind of can't ignore it any longer. let's say you saw that at 10 to 4 in the afternoon, would you be tempted to take a little bit off the table? Not a rhetorical question, but if you want to respond, you're welcome to respond with a thumbs up. Yeah, look, that's just a knock a third out for me and get on with my day. Or you know what, that's still a benefit of the doubt. And I hope we all understand why that candle. I wish we had a better way to talk about it, but that's the one, because we're getting that upper shadow. It's really confirming all the other stuff. So that's the one where we go, oh look, what's the opposite of benefit of the doubt? Just for safety, knock a third out and get on with my day, and that's it. We don't think about it any more than that. We just keep going. And what happens next? Let's have a look. Now we're pretty glad. Would we do another third on that day? I'll leave it up to you. Maybe we could just do a little bit. We'll just hold half our position. We're still strong here. We're still strong here. But it's getting harder and harder now, isn't it, to run with our whole position. And this is the beauty of the all in, all out. And now we're probably 2/3 out and 1/3 in. Is that fair to say? Up to you. I know some of you will have this and probably kicking yourselves maybe for not following some of these, because it's easy to go, oh, I'll give it another candle and see what happens. And it's hard to actually act upon these things. But we're okay here. I think we're still confident with our third. We're still okay with our third. And we're still okay with our third. And are we upset? I don't think we're upset at all, are we? I mean, I'm asking you to put yourself in the situation of holding Austal. We've probably made good money. And we're probably now feeling, you know what, 1/3 is the appropriate risk level for this. I can add some. If I got another white candle look like that, I'd seriously be thinking, 10 to 4, adding another little bit back in. But right now, given everything I've seen, 1/3's perfect. It's the perfect place to be. Anyway, that's my conclusion for you, Mick. And we've also, and the reason why we're not so stressed out is, well, we can always get back in. And the other thing is we know where our point of no return is too. Like if you know these things, where's the emotion? Like why does there need to be emotion to these things? Remember, ladies and gentlemen, they're just pixels. They're just black and white candles. They're nothing else. There's stuff we have to do that we're going to do with discipline and consistency. And then there's noise. And just tune out all the noise. It's just, okay, what do I have to do? Let's keep things that simple. Let's go to Mick's second one. He's got DVP. DVP, develop global. Hey, another great. I reckon we would have been zero risk position on this. I won't do the candle by candle because I think we can see pretty clearly that I wondered, is that the candle you picked as the ZRP? Is it earlier? Certainly some risk coming off on that day. No doubt about it. 100%. You who are listening to me, who know my methodology, we all agree that's the day we're taking some action. And then we might even be taking some action on this day here. Isn't it? Because it's that day there, confirming this day. We're going, lots of other good stuff I can do with my money right now. Yeah, the small odds are going bananas. And this is almost a time and frustration stop. If you're going to muck around like that, then I'm out of here, pal. So I'd go 2/3. I reckon we're 2/3 there. I reckon that's our ZRP. Closing beneath. I'm getting some thumbs up. Nigel's liking that as well. What do we reckon? That's our ZRP? I reckon that's our ZRP. I know it's easy to do in hindsight, but why does hindsight, they're just candles, everybody. They're just candles. They're going to look like this on your stock as well, aren't they? I reckon that's our ZRP day right here. And if you didn't do it there, then 100% there. And it gets to the point where you would, normal people, develop global's a great stock, or develop global, look, it's pulled back a little bit. I didn't get out at the top. How many times have we done that? I didn't get out at the top. Geez, I'd love to get over $5 for it. Next time it gets over $5, I'm going to sell. Okay, I didn't get it, right? But I should have. I deserve it. When it gets back over $5, yep, I'm out of there. So what you're doing, if you're of that mentality, and you're not, I know you're not anymore. You don't do that anymore. But if you think about what that mentality means, right? If you're here and you're telling yourself, I know you used to do it, right? But when you did it, you didn't realise this was your mentality. Like, you are saying, that's my upside, right? That's my upside. Oh, when it gets back over $5, because I deserve $5. That's my upside. And if it doesn't get there, guess what I'm going to do? I'm going to hold this thing all the way down, right? I will hold. You'll have to pry Develop Global out of my cold, dead hands, Carl, because I ain't selling this sucker until it gets back to $5. It's just such a faulty way of thinking that so many people, unfortunately, adopt. Okay, that's not us. Let's keep moving. Where to get back in? This is the candle here. I reckon, did I run this? I'm pretty sure I ran this as a plus 1/3 again a few days ago. I don't think it made feature, but it certainly made the broader list. So that's where I think we can have a little tickle, more as a variety of sort of setup thing. Would that have been the best setup on the day? No. We know there were fantastic setups, but just in terms of just mixing up the types of setups, that's what would interest me very much so here. And then now it's just a matter of fast forwarding to where we are, and nothing's changed. So I'm a FRP if you've got it, meaning, well, your current risk position, and which probably I know I write FRP, but that means that's your risk position that you got. But FRP kind of means that I'm completely loaded, isn't it? I think maybe it's CRP. I know that you could put another letter in there, it'd make a different word. But your current risk position is probably the better way to put it. Like, whatever you've got, happy to hold. And then I'm happy to add risk. I would say on the next, because it's predicated by the next demand side candle, then I could go plus 1/3 just to get some of the, I don't know, do you prefer FRP or CRP? Let me know in the comments. Let's go to mixed third one, and don't worry, everybody will get theirs done today. I'll start to move a bit faster. DAI, some problems here, and yeah, look, well, on the way up, $1. Well, we actually said that, didn't we? We said minus 1/3 here. So at mostly, that's not an ad risk day because of the upper shadow. That's certainly not ad risk. So I think we're pretty happy with the fact that if you follow my rules, you would have got 1/3 out there, maybe another 1/3 there or there, like one of those two, and maybe even there. I'm not sure if you've got any risk on this one, to be honest, using my model. I think we're out of that one. Shout at me if you think otherwise, but I think somewhere in this process here of hitting $1 and any of those candles, we've started to reduce risk. Today's not anywhere near good enough candle to add risk, and because of the severity of this decline, it will not go back in my list until it does something pretty neat. Okay, high peak, high troughs again, incredible candles. The severity of this will probably keep this out of my plus 1/3 list for a very long time. It will just get ignored. Even if it pops in white candles, I'm just going to skip straight over it because this is too much. This is too much of a signal that the supply side is motivated, and I don't like that. I don't like big black candles. Your 3 there for your Mick. Let's go to, I think Richard... no, Mark has got some here. CYL. These are the last 3. Then we'll get to live requests. I think still okay here. FRP last time we saw it. That's a plus 1/3. That's a plus 1/3. That's a plus 1/3. That's frustration. That's nothing because I wouldn't do anything on that candle because I think you've got enough. Today's reassuring, but not as emphatic as it could be. I think we're just ditto FRP here, what we've got, or CRP. I don't think I'm going to do CRPs. I think let's just stick with FRPs, okay? Your current risk position. But I know we can't change from FRP. And would I add risk? No, I think we've got enough here just based upon what I can see. It would have to be a pretty special candle, so let's just leave it. No really sinister signals to do anything just yet, but certainly beneath here we've got a problem, and maybe on the right candle beneath there I think we're actually taking our first step here, whatever, sort of a 750-ish full black candle close beneath there. Maybe that's your second, third and then see how you go on that final bit. SMI, another gold stock, that one. Still okay. Today's a decent signal. I think if you're that way inclined, looking to add risk today. A little bit of a pullback at a fairly natural point of supply. They don't always kick in immediately. And then if we keep going, that's too far back. I wouldn't even worry about that. So let's just go zoom normal. So really that's it. So that's attractive as well. The fact that it's, for our intents and purposes, dispensed, consumed with all major points of supply that we need to worry about. So I think we all agree as well, there's nothing so sinister in there that we're too worried about it, and therefore it makes our life quite easy. FRP. I would have preferred that this trough here, this one here, I would have preferred it to be at or above there. But it's okay. And your third one, in fact, there might have only been two here. DAI, which we've already covered. Jenny sent me an email as well, thanking me for the work I do here, and it's an absolute pleasure, Jenny. I wanted to respond to you. I will send you a response directly, but she said some really wonderful and kind words that make me very happy, so I appreciate your sentiments there. It's a pleasure doing what I do, but particularly when I get emails like that. Okay, let us go to your live requests now. And scroll to the top. Adonis has some, no, we've got CBO. Normally kicks us off with some US ones, but we've got CBO to date, which Adonis I still think is fine. I don't think there's anything we really need to do there. It's a bit sideways. I know it's frustrating, but I don't think it's sort of time and frustration stop stuff just yet. Still above the short-term uptrend ribbon. That's still very good. Yeah, I mean, we've done some analysis here in the recent past, haven't we? Identifying a particular level, which I think is even more important now. It's been reinforced since then. So I think a fairly straightforward path, hopefully to a continued uptrend or managing risk on that one. And we'll do your two US ones in a little while. Then we go down to Avant saying, hello everyone, hello Avant. Amber saying, thoughts on AIS, which I think had a little bit of a pullback today, but nothing too sinister. 50 cents. Is 50 cents a round number? It is a bit of a round number, particularly if it's sort of spent some time around 25, which this one is not so much. But I don't think this is our first rodeo at 50 cents for AIS, so I don't think it's that important. Certainly $1 will be, but we shouldn't be surprised if we see a bit of supply coming in at 50 cents. And then if we sort of see that supply coming in at a level from the not too distant past, it really isn't. That probably tells us, Amber, what happened today right there. That will give us a perfect indication of what we're dealing with today. Is that a big problem? Not really. Yeah, it's a bit of supply there. There should be some supply there. It's a combination of factors, 50 cents and a pretty decent point of supply, certainly a major point of supply, because we've got the peaks and troughs rising on this side and peaks and troughs falling on that side. Okay, so you can have your regular peaks and troughs, which are just the A's and the V's, but then you have your major peaks and troughs, okay? And they're pretty straightforward because if we call this an M POS, major point of supply, and distinguish that from our regular POSs, and we'll just label those POS, that should be pretty intuitive, I think. Okay, so, and don't take my word for it, go back and have a look and convince yourself that MPOSs have more impact into the future than regular POSs. And by default, therefore, if we have, I'm just looking for a good place to draw it, maybe we'll do it down here. We've got regular points of demand, and then we've got a major point of demand as well, just the opposite happening. Pod, and let's move that one over there. And all we're doing here is kind of saying that, well, we shouldn't be surprised that there's a little bit of supply coming in at this level. And when supply occurs at a place where I'm expecting it, for me it's a whole lot less sinister. It's when it comes in where I'm not expecting it that catches my attention. Oh, what am I doing? They're not. they're not pods at all, are they? Those ones are. Okay. So what do we do? Do we run out of the room screaming? No, I don't think so. Today's candle in and of itself is insufficient, in my opinion, to warrant taking any risk off the table. Even with the 50, even with that point of supply, I still think it's a bit jittery. Now that's me, and for my sensibilities. If you were to go, Carl, I'm sorry, mate, I can't hack it being FRP after this, but you know what? To scratch my itch, to make me feel good about this, because I'm doing pretty well on it, Carl, I'm just going to do that and sleep a little bit better, okay? Because knowing full well I've still got 2/3 in this trade, okay? If that's you, that's good. You are using logic. You are using what you've seen. You're using what you've learnt to make, I think, a sensible decision that fits with your sensibilities. But try and be consistent with it. You know, if you see this on this one, then have the same rule for the next one and the next one. Okay, don't just pick and choose what you feel more comfortable or not comfortable with. That's not me though. I still think we're okay here. Happy to run FRP because everything else is magic, of course. So it's your choice. I used to be very rigid in the things I did. Now it's more what makes me feel comfortable. And I know that when I feel comfortable about what I'm doing, I'm more relaxed. And when I'm relaxed with my money and my trading, I make better decisions. When I'm all uptight and I'm emotional and I don't take a third and I kick myself for days and weeks after, that's when I make crap decisions about my trading. So I don't beat myself up for making a decision anymore. Okay, I try my darned best to stick to logic, have a reason, even if you've got a little journal, a little notebook. Aeris Resources 29/9, you know, that's a candle. Take a picture, snapshot it, because you might be doing it in a Word doc or something. Just have that little picture there, and that's what I did, and that's why I did it. So you can always hold yourself to account that there was some rationale behind it, rather than just being, oh, it's gone up, I'll take some off the table. Let's go to, and look, if you don't care and trade, you don't want to get better at your trading, don't do those things. If you do care and you do want to get better at your trading, that's a lot of work, isn't it, keeping your journal like that? But from the work comes the growth and the rewards. Let's go to Avant. Avant's got AFG, question mark, fresh long on that. No, I don't think so. I'm not feeling any great need to add risk on today's candle. Today's candle's a good candle. Don't get me wrong. That's a good candle, and it's a great indication that demand is holding steady through here, okay? But I'm also just a little bit cautious given what we've got here, all right? So just the way that turned out with that long upward pointing shadow, because we were off to the races there, right? If we look at what was happening, and that's in the shadow of $3 as well, isn't it? So we're here we go, 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 marching along. At one stage, this was a big white candle on massive volume, probably a news announcement. It's probably its results there on the 27th of the 8th. Here we go, everybody's piling on board, and what did it find? It found supply. Okay, there was a fund manager out there, make no mistake, there's a fund manager out there that got in probably at 150, that for them, they doubled their money and they said, let go. Just, look, best time to get out when everybody's buying, great liquidity, let's let this one go. And then it was, no, we don't. And what we've done there, we've got a bunch of people stuck in this trade now who they thought they were buying a great candle. Of course, we don't trade on intraday candles, we trade on end of day candles, but they're looking intraday and they're going, what a fantastic chart, what a fantastic setup. And boom, by the end of it, they're caught out, right? The next day, okay, even on that day, they only want one thing, and that is to get as close to their break even as possible, which is above now 280, it's around 290. And look, actually, that's a really nice candle, but we just see that latent supply come back into the system. That's a good candle. I like that. That's starting to tell me that latent supply is being consumed. Look at the volume, okay? So we've had an influx of demand, an influx of interest, but that supply is still in the system, isn't it? It's not a matter of, oh, there's lots of demand and it's not finding any supply. That volume is buying and selling. There's lots of demand because it's still a good stock, we know that. But it found that supply, found that latent supply. It's clearing it out. It's consuming that supply. So for me, that's a really encouraging sign. Is that an add risk day? Probably not for, well, it's line ball. Look, if you added risk on that day, I would not tell you not to, but I'm still concerned a little bit about that. I just want to see us close a little bit closer to that to convince me that we've consumed enough of it to be able to get through it. And that day there is a problem, isn't it? Like, where did all that demand go? There was so much demand consuming that supply, and then they've just disappeared. We get a decent day there. We get a decent day there. There's still buy the dip going on, but it's just not as convincing for me as it could be. So these last two candles are very constructive. The whole picture is constructive, but is there urgency there? Is there just absolute urgency? I can't give this another day. It's getting in on top of everything else I've seen. It's 10 out of 10. It's not 10 out of 10. And there isn't the urgency that we're probably going to see as we go through tonight. I just want to give you the tools to walk through the candles and have some objective analysis, isn't it? Not subjective, objective analysis, and then come to a probability-based decision, comparing against all of the other opportunities on the table. So it's a pass for me for now, but it's constructive. I said that. Let's go to GDG, which is similar, better. This here is the issue. Let me go back here. So that's a problem for me. Those two together, not liking those two. Particularly after that, like that should have been off to the races. So again, creating a bit of latent supply, and this is actually a good case study because look how long it took. Look how long it took to consume that supply. See, and this is the day we consumed it. That's the most annoying thing about this chart. Is that's the day we consumed it. It's so similar to that last one. And it's telling you why I'm kind of warning you about the last one, because you need to consume that supply. And then it did it. And then it didn't do anything after that. So the supply is sort of still lurking in the system. I'm okay with this, don't get me wrong. What did I say minus? Look at that. That's interesting. I wrote that. Did I write that last week? Why would I have written that? I don't know. So today's candle is the 29th. So that means last week we looked at the 22nd candle. So we had that candle. And I didn't have that candle yet. And yet I wrote that. Why did I write that? That seems really weird for me to write that on that day. I don't know what I was saying. I'd have to go back and look at the video and understand why. Yes, that's not a great candle, but is it enough to peg that? I know this is where the demand started. You'll often see me peg a significant demand side candle, nearly triple the volume. Yes, it's important, but I think that's a bit aggressive for me to peg that candle. Now, after that candle, that's starting to make a lot of sense, isn't it? Tickled. I think still tickling. Yeah, see, remember what I said last week about, well, sometimes we have to be practical. So I think that can come down here. I don't get me wrong, I don't like moving things down, but I have to be consistent with where I think the demand is and saying, well, I want to be out when I get beneath that demand, when that demand's consumed. I still think demand's working in the system. So I think we're going to move it here. This candle's fine. And yeah, I don't think I'd want to move it again, so I think I'll stick with that one. And it would have to be an almighty downward pointing shadow tickle to move it again, because now we're getting close to the downtrend ribbon as well. I think I was just giving you other alternatives, wasn't I, as to where you could, because the last trough, I started to remember this now, and I was saying the last trough is so far away. Some people might be having flashbacks, but I think I was saying the last trough is so far away that if you're adding risk here, then that is sort of your first place to start to back out. And I still think that's valid. So yeah, there, and looking very closely, I think we'd probably be ZRP beneath that one, wouldn't we? Anyway, FRP, and happy to hold in the meantime. So let me just copy and paste that over I'm pretty sure that's what I said. Correct me if I'm wrong. FRP if you've got it. I don't think we need to add risk just yet. Let's see a nice big white candle there. Big white candle there. And when we see it, we'll talk about it then. CU6, potentially a bit of a turnaround setup here. It's problematic, and I wonder if you are ZRP over there. That was turned out to be a good thing. I wonder if you're spotting the significance now of some of these MPOSs. Maybe that's our theme for the day, isn't it? This idea of an MPOS and what it means for more turnaround style setups, and how much work that we really need them to do. Because if you're looking at this, right, and you're looking at this to the exclusion of, and I can show you 50, in fact I can show you 60. I can show you 60. There are 60 charts better than that straight up. And maybe this is going to be my trigger to hurry up tonight, Carl. This is not the point of these events, is it? For me, just to show you the 60 charts that I thought were best, because we want to talk about your ones. We want to talk about why maybe I don't think they're the best. I think that's what you want to know. I don't want to put words in your mouth, but so these are the ones that I put in, and we're looking at a bunch of full white candles. We're looking at above average volume moves. In most cases, that one doesn't have to, but that one I like just the fact that it's a turnaround. Look at that one. So there was 60 today. I don't think I've ever had 60 huge gap and run. So we'll be talking about, and this is interesting here, isn't it? This is Drone Shield, and here's your MPOS, and then a confident move back up. Not enough though, but today's consumption. Could have had a better close, but a massive candle. And so that's interesting. Do I need to go through all 60? I don't think I need to go through all 60, but just look at some of those last candles, right? Look, gap and run. And then we'll pull back to CU6. And we can muck around with Mr. In Between, and I can tell you about MPOSs and my concern about what this area means going forward, how tricky I think it will be for the demand side to consume what I understand will be a massive amount of supply there. I can talk about, it's not bad. It's not the worst one I've seen. I can use phrases like that. I'll give you in brackets, everybody. When I say it's not the worst one I've seen, that's me being very nice. This is not the worst one I've seen, but it's far from the best one. I think that's probably the rest of the sentence. So I don't think I need to talk about this any longer, because in the first instance, we'd be ZRP. I just removed that label at the start. So we're ZRP. And if you've started to add risk to this, then either you can tell the future and you know this is going to be the best stock over the next 6 months, or you're adding risk to a suboptimal opportunity, in my opinion. So I'm going to move past that one pretty quick. Thanks, Savant. I'm going to go to GNG. And I think this one deserves attention because it's got all the pedigree in the world and actually some decent candles through here. So that's getting my attention, and that's getting my attention. But is it enough to put it ahead of some of those other ones that we saw in that other list? Where I would like this, maybe ahead of some of those other ones, is a lot of those are bottom left, top rights. This is a little bit of something else. It's a bit different. Diversification in terms of the setup. Back above the short-term trend. Look, I actually like this. You would not get any complaints out of me if you added a third on that candle at all. Is this the best out of everything we can see tonight? I'm not so sure, but it's very good. There is an MPOS up there to consume. Some people, quite valid, they like to buy pullbacks. Some people are more comfortable just buying those big moves. This is more of a pullback thing, and for that reason I can see some benefit there. You've got my opinion on it, FRP plus 1/3 from Hoozle. Let's go to PTN. So I'm moving, that's not it. That's it there, thankfully. Let's go zoom normal. And this one is for Peter. and looking very good. Very happy with that one. Hasn't come up in my scans because we're going to see a minimum turnover filter over here is 0. And that's the only reason why it's come up, just not meeting my liquidity filter. Doesn't mean it's bad, just means it's not meeting my liquidity filter. So what we want to see is we want to see some interest. Okay, small ones, absolutely vital. We're seeing some interest. We're seeing some interest there. I think it could be better, but we're seeing some interest there. I love vertical moves. I love shallow pullbacks. I love white candles. I love all of that happening on increased interest. We're seeing it take out a point of supply here, or at least getting very close to doing so. I would say we are in the process now of interacting with that zone there. That might give you a little bit of a cause for pause, cause for maybe just seeing how the next couple of candles play out, Peter, just on the basis that there may be some latent supply still working in the system over here. But that's being a little bit pedantic. You know, oh, actually, it's not even that long ago, is it? I don't know. I don't know if you saw that major point of supply out there, Peter. That might just help you frame this one amongst some of the others. If it doesn't bother you, then everything else checks out for me, without a doubt. This is a very strong setup, and if that wasn't there, you'd have no complaints from me at all. But yeah, otherwise happy. Look, it's got all the hallmarks of the stuff I like to see. Let's go to RMX, which I'm pretty sure is in the list, Red Mountain Mining. I don't know if it made feature though. It did make feature. And again, this is a turn your brain off one. This is don't overthink it. This is definitely don't go check out the fundamentals, because I'm sure there are none. Okay, let's face it. It's probably a piece of junk. But we're not planning to hold this one in 20 years' time. We're probably not planning to hold it in 20 days' time. If we're still holding it in 20 days' time, then something magic, truly magic, has happened. We're buying this, and you might cut it back from a third to a sixth or whatever it is, $100, $50. But this is one of those that I think you just put some risk on, and if it turns out, you're pretty happy, and if it doesn't turn out, you're not all that upset by it either. But you have seen, not me, you've seen yourself. I've seen it, but you'd only be listening to me tell you about it. But you've seen it firsthand that these ones can do very, very well, if only after a little bit of consolidation, after the deadwood. I say they're just deadwood waiting to die. People who have been waiting for this thing to finally go up for years, okay, to get a little bit of money out of it, we need to now trade with them, don't we? Okay, the people who just don't know the news story. But apart from that, I'm pretty happy. That is not my phone, I assure you. My phone's on silent, but it is a confiscated device. A device that's been confiscated, ladies and gentlemen. And I don't know how to turn the sound off. So that's why that is sounding in your ear. I would not be so rude. My phone is on silent, I assure you. Let's go to WIN. Shenanigans today. Beautiful day over here in Perth today. Public holiday, as I said. We went to John Forrest National Park, did a wonderful walk there, took them away from their social circles and social media as well, and had lots of "Are we there yet?" And then we went to Mundiri Weir. And why are we going there for? Because it's outdoors, it's in nature. You might like it. This sucks. This is boring. Why am I here? Anyway, getting a few laughs, a few people probably relating to that, but it's all fun. We love them nonetheless. WIN is falling into the category of the last one, isn't it? RMX, and again, these are messages coming in. They're not my messages. RMX and then WIN is the same thing. There it is. There. I like this one better. If I had to pick between RMX and this one, my money would go here. Okay, there's just something about that. Just those full white candles, no mucking around, a little bit above, I think, this old point of supply, and substantial volume there. So it almost makes RMX a moot point, doesn't it, when you see that one next? So brilliant, Peter, for putting them in. Peter saying he got in too early and held it as it didn't get stopped out. I don't know. I mean, I'm pretty sure I ran this. Did I not run this on this day here? So 3 cents to nearly 6 cents. I think pretty happy with that one, and no reason to get out at this stage, in my opinion. Sue Scott, hi Carl, hope you enjoyed your day off. I did. Yes, I did enjoy it, even if others might not have Found it so stimulating. Can you please give me your thoughts on USL? Well, USL I still think looks amazing. Certainly made the feature list today. I can do this one very quickly because it is a perfect chart. FRP plus 1/3. There's nothing in here I don't like. Now, keep in mind that I think this is a magnificent chart, but I don't know where it's going to flame out. Will it flame out? Oh, no, Carl. You let me tell you about Unico Silver. Its tenements are next door to and the historic workings, and it's, mate, this thing is going to flame out. It's going to go back probably to 10 cents at some stage between now and the next 10 years. We all know that. It'll probably raise hundreds of millions of dollars in capital in the process. Silver will probably go down into, back to Kaputski again. These are all things that will happen. Okay, I can assure you, been around long enough. What's that old Sun Tzu saying, right? But it's not happening now, and that's all we care about. So we are going to make hay on these things and other things like them whilst the sun is shining, the sun is shining. But we're also not going to get hung up. Here's the point. We're not going to get hung up if tomorrow's a big black candle, okay? We're going to knock a third out. If there's another black candle, we'll knock a third out. If there's another black candle, we'll knock a third out. And then we're going to keep moving on to the next thing, okay? We are in these things for a good time, not a long time. Full risk position plus 1/3. Okay, no love affairs are the seeds of love affairs are not being sown in this bull market, let me assure you. Same thing on Chalice Mining. Finally came to the party. I mean, let's face it, when Chalice Mining starts going up, we know where the bull market is literally begun, but maybe it's in the last batch. Happy to hold their FRP. A few people who I think have traded or owned Chalice Mining or still own it understand what I mean by that one. FRP plus 1/3. Again, we're not going to get wed to these things. They are, horses in the Melbourne Cup. I know I've got plenty of analogies, don't I? And horses in the Melbourne Cup, and we don't bet on the winner. We're just the jockey. We're just jumping from the horse that's running the fastest. That horse is running really fast. We're going to jump onto that horse. Oh, that horse starts to get a bit tired, doesn't it? Okay, that horse looks like it's getting a bit of burst energy. We'll jump onto that horse. We're just the jockey jumping from the fastest horse to the fastest horse. We don't love those horses. Those horses are going to get tired at some stage, and so be it. Let's keep going to the next one, which is FXG, which is a horse. I don't know what sort of horse you would call this, Far Lap or Mackay Diva or Winx or whatever it is. But this thing is going gangbusters, isn't it? And I'm guessing I've still got some people on it because, in fact, I know I've got people gone on it because if you have gotten out of these, ladies and gentlemen, then you are very, very naughty, okay? I'm going to confiscate your phone if you've gotten out a single share of FXG. So I've put this in so many times. I'm sure some of you have bought it. But if you have sold a single share up to this point, phone's getting confiscated. You're grounded. Because you haven't had a single candle there that has given you reason to sell one share. And if you have, you should be embarrassed by that because you're not following my model. You should be FRP right now. And I don't need to chastise you because you're probably chastising yourself for doing that. And it could crash tomorrow, I don't know. And you can say, ha, Carl Smarty Pants, I got out. But then you're missing the point. Let's go to, thank you, Sue. Let's go to AL3 and saying we've got some risk off today from Robert. Yeah, I don't know. Why do you have risk on this thing? Like, where'd you get risk on? The closest thing to risk on, and I might have even run it on that day, is here, but it hasn't warranted any extra risk since then. And as of yesterday, it's still in a ZRP position. It's still ZRP now. So I'm not sure what comment you're requiring from me because this is a ZRP and therefore it doesn't require any comment. I see absolutely no reason for me personally to have any risk on this, and therefore I'm going to keep moving. Does not require a comment from me. Let's keep going. Sorry, Robert. Holding 1/3 due to longward downward shadow. I can't see any reason to do that. Let's go to David. David, hi Carl, your thoughts on PTN, which we have done. I think it's very good, but a little bit concerned about the major point of supply. If you're concerned, stay out. Otherwise, I think it's fine. Happy to add some risk. That was the one Peter had before. HSN. Oh, yeah, okay. Let's do a thumbs up versus thumbs down. Thumbs up is don't do anything. Hang on, full risk position. Thumbs down is probably a great stock. Probably go up at some stage again, but we have to knock some. Yeah, look at this. So it's not just me telling you this, David. Everybody else, it's pretty clear cut. We cannot proceed under my model at FRP here. We've got to take some off the table. I'll leave it up to you as to how much you go. I don't like that candle. Very average volume. That might be just enough for me to say, well, there was motivated supply in the system. Oh, but even then, like, where was the demand? Like, the demand, that actually, if anything, yeah, I mean, if it had big volume, it would tell me that the demand is still there. So the fact it kind of didn't have a lot of volume, you've got motivated supply, you can see that as a candle, but where was the demand? They didn't find any demand. We're supposed to be in a demand side environment where they're buying the dip. And yet, with all of that motivated supply, Carl, how do you know there's motivated supply? Look at the bloody candle. They were chucking it out today into a demand side volume, demand side vacuum. Why the demand side vacuum? Yeah, I don't know. I think, mate, look, and I still think there's a reason to have a third on this, on everything else, but I think that's what I'm doing. I know this bit's a bit subjective, isn't it? The objective part is unequivocally we have to do something. So at least that part of my model is objective. Is it fair to say the only subjective part is 1/3 or 2/3? I think that's pretty good. If that's all the subjectivity we all have collectively, we all saw it, then I think that's pretty good. Okay. And in fact, if I read the rest of David's comment, he is saying, should I go minus 1/3 or minus 2/3 today? And I think collectively we've all answered David's question. And that's what I love about Monday nights. Okay, let's go to FMR. How are we going with time? Please don't put any new ones in. I'll tell you who's last on the list. Justin is last with DRE. And we have to call it at some stage. And from next week, I don't know if you know what's going to happen next week. It's going to get ugly from next week because I ain't changing the time I do these. 7 p.m. Perth time is the most appropriate time for me to do these. Unfortunately, it might not be the most appropriate time for you to do these things after next week, but it ain't going to change here, let me tell you. And yeah, that is a hard start on that one. And if you don't like it, I can call somebody in and you can talk it over with her. I finished these late enough as it is, trust me. Okay, FMR, which is, I get it, it was looking good, and this is the risk we're taking, aren't we, with these little ones. I haven't seen this one because I'm guessing it's zero filter all the time. And I can see it. I see here gangbusters. I can see here go for it. Okay, but we also not getting upset about this. We understand what we're getting into. Like, we sign on for these things with these small stocks, lower liquidity. They can do this. I can't see a path. Personally, for me, I can't see a path to having any risk on this one. So I'm going to keep moving on that. That one for Daniel, FMR. Make sure I've definitely got the right one. Yes, I do. SNG. This is nice. Now, I haven't seen this one because it also, so I know straight away, I can tell you straight away when something's not meeting my turnover filter because I haven't seen it. Because if it is, I have seen this and I've run this. So this would be a feature chart for me today. Decent volume, happy with everything, love the movement. So FRP, if you've got it, plus 130. If you don't, that one I like. And great too to put side by side, Daniel, to understand how I would grade them relative to each other. Unfortunately, this one is not working out as well. This is probably more of a time and frustration stop. Probably okay, a lot of probablys in that we've still got this and this, but it's just frustrating, isn't it, that it would look this good and then do something like that. In a market, we saw that small ordinaries index going gangbusters. There's nothing so obvious and sinister in any of these candles. That's definitely a hold candle. That's not so sinister as to get out, I don't think, and really neither is that one. That's the closest thing there. That one is, you probably argue, can't run with the full risk position, but even then it didn't close on the low, did it? So that's fine. Maybe there. Is it there? Is maybe that one the 1/3 and that's the 2/3? Still holding a third, but questioning it. And I'd almost take today's candle, a close beneath the low of today's candle, I think is your point of no return, because we're already beneath there. So that's just my opinion. I think we are still plus 1/3 on this, but I would say close below that level, and that would go. And it's more of a time and frustration stop, because in a different market we might entertain this a little bit longer, but there's just too much other good stuff going. I've got 60 feature charts. Let's go to Michael's got CTT as a turnaround setup. Absolutely it is. In fact, we talked about it last week, and I was hoping some people were looking at this during the week. We look at all the lines we drew. If we drew that many lines, it must have been something interesting. Let me get rid of those lines, because we were talking, I'll summarise. We were talking about this one as an aggressive setup. We said it was an aggressive setup more previously, like, around there or there or there. These are the candles I just disappeared. But we looked at it on this candle. We said, well, we're in the ribbon now, and we want to respect that ribbon, because we know the ribbon has done some pretty nasty things to it in the past, and we ideally we can close above halfway up the ribbon. And I know it's frustrating because you're giving it more, isn't it? You're giving it more room before you get your entry. And I think it did that. It did that with an emphatic candle. So if this is still an aggressive setup, it's not a turnaround setup yet. Because for a turnaround setup, you'd have to give it even more. And you say, Carl, why are you giving it so much? Well, it's not my fault. I'm sorry. It's just that it was so bad. It fell so fast and far away from the ribbon that it will take so far to get back. I didn't do that. It did that. But my rules are still my rules. So it's still a long ways away from a turnaround setup, but it is therefore an aggressive setup, and it meets all of our criteria for all the reasons we talked about last week, because it closed above halfway. So happy to add risk on this one. It's frustrating. I agree in that it's taken so long to get here, but again, I'm going to disclaim liability on that one, because it was just such an extraordinary downtrend. But yes, I agree with you. In terms of getting a mix of setups, then this actually comes to the fore a little bit, isn't it? It's giving us something a little bit different in our setups there, in our long exposure. Who's saying, from your decades of experience, what's your thoughts on using Elliott waves for price targets? Okay, well, not me. I'm a pass. Is there any merit to it? I'm prepared for the light-hearted teasing that may result. Yeah, well, I'll be very polite about it and just say no, it's not for me. Again, it's a prognosticatory. I know that's not a word. Prognosticatory tool. I don't do prognostications. I used to love prognosticating in the past. It used to make me feel really clever when I could say, because when you start talking about Gann and Elliott wave, people love that shit, I tell you, because they love to think that you can forecast markets. They love to think there's somebody out there that can predict the future, because it makes them feel really, really comfortable. This. But I've never met an Elliott or Gann person, honestly, meeting them, speaking with them, not people that I've just seen on the internet, but interacting, people I know firsthand. I've never seen one that was successful to any large degree, honestly. I've seen lots of people who've stuck it out for years and been just very disappointed and frustrated with their performance, and that is just simply from the fact that they'll get to the point where they've made a prediction, and quite often they're never wrong either. It's like, and you say, well, it didn't do that. And he said, oh no, but not this wave. I actually miscounted. This is wave 3.A or 2.6 or. Why are we trying to tell the future when we can't tell the future? There is nobody on the planet today, ladies and gentlemen, I assure you of this. It's impossible. You cannot tell the future. It is possible for the human brain to do so. So why would you bash your head away every day believing that anything you predict will ever come to fruition? It's such a pointless and utterly futile waste of time. And that's why I dispensed with it. And now I don't predict the future. I've totally given myself up to the fact that I cannot predict it. And this is what makes me humble, because I do find that Gann and Elliott wave people, I find them to be very, very arrogant people. Okay? And sometimes arrogant people are drawn to these methods of analogy. Okay? They were arrogant before they started doing Elliott wave and Gann, and Elliott wave and Gann just made them more arrogant, because some people like to feel that power over markets in the future, and some people just go, you know what? I'm a follower here. Yeah, I don't make the prices. I take the prices. Let me know my place. Okay, I can't get out at the top because I don't know where it is, but I have a pretty good idea after it's happened, and I'm okay missing on that last little bit. It is definitely a philosophical and a psychological juxtapositioning paradigm shift that as a trader you will be challenged with over time, because you want to investigate these other things that you haven't learnt or you haven't had contact with, because they're interesting. They are interesting. They're fascinating, and they're tantalising, this prospect of forecasting. But I can tell you, I've tried it and I've denied it, and it's not for me. And as I've said several times in this presentation, find the thing that resonates with you and stick with it. And hopefully I'm giving you something that is a suitable alternative, even if we can't pick the top and the bottom. Sonia saying, thoughts on EOS. And for people who don't know what Elliott Wave and Gann is, go and investigate those things. And then everything I've said in the last 5 minutes will make sense. Otherwise you go, why is he talking about this crap? Electro Optic Systems. And have I offended anybody out there? I might well have. Because I do put these recordings up on the internet. I'm bound to offend somebody at some stage with talk like that. Blasphemy. For me, yeah, WD Gann is up there with Warren Buffett. Let's go to EOS. So a few people responding there positively. Good. EOS, I think, is brilliant. My God, it's good. And I'm going to put this in the same basket, apart from here. Look, we labelled it here, minus a third. Maybe we did 2/3, but pretty soon we rectified that in here, didn't we? But even then, we would have held a third the whole way. Even through here, I think we're still holding a third. But since that candle there hasn't been a single candle. So from $6, now we're at $9.50. Okay, are we adding risk here? Now this is going to go into a feature chart tomorrow. You can see there, but are we adding risk? Because remember, what happens in Chart Watch at 9 a.m. Eastern Standard Time is very different from what happens on Monday nights, because I don't teach them all the stuff I'm teaching you, and I'm not even going to teach it to them on Wednesday in the new webinars, because I won't have time to just sit around and chat like this, like we do. So on the first pass, what are we thinking? What's the problem here? I think if you're in this, I think just stick with the risk you got. That's where I'm going with this. Amazing setup. And if it wasn't where it is, nobody's messaged me yet, I would absolutely put plus 1/3 on there. But I think for us on Monday nights, yes, it's an FRP, but not a plus 1/3. Yeah, because I just think $10, like you're getting it at $9.50, and you're going to have to get some other stuff out at $10. So $10 is a problem for me. This, to the best of my knowledge, I was going to say this is the first time we're at $10. It's not the first time. This did this pre-COVID. I still think $10 is the big deal. I think if you were pre-COVID, you've forgotten about that stuff by now. I don't think anybody's still in it. I think there's a new generation of traders now obsessed with this one. So I still think $10 is the problem. So for me, 100% compulsory, taking 1/3 of my risk off the table at $10. And it's probably almost a next candle proposition, even if it doesn't get all the way to 10, because we're going to be in the shadow of the 10. We're going to be in the thinking of 10. So let's just see how it goes, particularly if the candle is a blowout candle. It wouldn't surprise me if we saw that. Doesn't mean it's the end of the run, but I'd be shocked if we didn't get at least a week, 2 weeks pause at $10 on this one. I'd be shocked. So certainly FRP. I'm questioning whether there's any need to add new risk on that one, but otherwise it is the perfect chart. Let's go to, that was Sonia. Let's go to Peter. I've created a Facebook private group, Disciple of Demand and Supply, for anybody who wants to communicate. You're certainly welcome to. And I will leave that window open for you to share your details afterwards. Don't do it now because I need the list now. But after I say goodbye, everybody, I'll leave that open for another 10 minutes, and feel free to do that. And I'll try and find the list as well, Peter. Michael's saying I-88, which is not one that rings a bell. Let's go here. I-88. Have I run this? I don't know. Let's have a look at the turnover filter. No, I don't think I have. I mean, that's the only candle that I could have run it on. So no, it's not something I've seen. It doesn't mean it's bad, just means it's not something I've seen. It is looking a little bit disappointing. I don't think your time and frustration has stopped out just yet. I just think it's just doing its thing. The volume here could have been better. Is that fair to say? Considering some of the, just some of the stocks that have just captured the market's imagination, this one is looking a little bit pedestrian. It's not terrible, and I'm not just saying that, to placate you. It's not terrible. It's a turnaround setup. It's bona fide. Obviously, that's the candle, and it hasn't done a great deal since then. It started to look really good intraday there, and then just drifted off. Maybe it is a time and frustration stop. I can see why you went for it. I can see why you'd give it some more time. And maybe that's it. I'm struggling here. I'm struggling with this one. It is a confusing bunch of technicals there. I think we can hold on to it for now, but don't give it too much more room is probably the best way to say it. Let me also add, I don't think you did anything wrong here. If you're on this one, I can see every reason why you've done it. If I could counsel, I don't think the interest was there. The fact that it didn't make my turnover filter is a bit of a hint, but I just don't think the interest was there on this run. It started to look interesting there, but even then, that's not huge. So that would be my only criticism in terms of your getting into it. From Michael. NXL as an aggressive entry, yes, I think that's where we're at right now. And I have a feeling we might have talked about that exact concept last week. And yeah, look, I think you can go, because we have probed the long-term trend ribbon, we've probed it. It acted as supply, quite convincingly so actually on that candle. And then we've actually come back pretty well. Today's the key candle. Today's like the at-risk candle. The only question mark I have is, has it closed above halfway in that trend ribbon? And I'm happy just to give it the benefit of the doubt on this particular instance because it has probed. It has probed that. The supply came in. So this is like a dink. Ideally it dinks above. It hasn't dinked, but at least we've seen the supply manifest. We've seen how the demand size dealt with that supply. It's actually dealt with it in a pretty positive way. Above average volume today. Could have been a slightly higher close. The only thing I'm tossing up here is whether we're giving it another candle with a high close, getting above that halfway point, or we're saying it's done enough. And I don't really have a definitive answer on that. I'm just giving you, the parameters of my thinking. You might want to change the risk. You might want to go for less than a third, if that's the case. I can see where you're going with this. FRP, if you've got it, it's an aggressive setup, plus 1/3. Just giving you my thought process. GNG, which I think we did. I think it looks good, yes. And YOJ, Yoji, are they still around? The little chocolate things. Again, I haven't seen it. It has not met my liquidity filter. This is the candle, and which makes this even more frustrating and telling. For me, it's a pass. Yeah, it would have to do a decent dink again. Somebody's up there waiting for this to get out, and that's concerning. I can see it was looking very good though. I would have been with you. I would have been with you on that day thinking it's got a very strong chance, but the 3 candles since then are a bit disturbing. Let's go to VUL, which I put in, to my surprise a little bit, but I can't really not put it in on that day there. And then I think I ran it again on that day, and I'm pretty sure I ran it on that day. So you can see my model and my mentality is moving back to an adding of risk position or mentality. Today's candle is nothing candle. It's not a take risk or to risk off the table or add risk sort of candle at all. It would just be completely ignored. So in the absence of doing anything, we are therefore still full risk position. And on the next demand side candle, content to add risk on that one, but nothing doing today. DRE is our last one. We're getting close. We've got WEL in the US. We'll do that in a second. We are getting very close then. NVA, which is in the feature list today because of the enormous white candle on absolutely massive volume. We've talked about interest today, and that one has it. Just zooming out just to check if there's anything really sinister going on in the background there. And I don't think there is. I don't even think that's a major point of supply. I'd have to zoom in and figure it out. But well, actually, that's weekly chart, isn't it? So there may well be one in there. And even if we were really conservative and did this, we could see we're miles away. That's kind of the point, isn't it? Look, there's a little bit here as well. So that's where we're going to encounter the issue first and into there. 3 years ago, 3.5 years ago, I think we're okay. I think we're okay. The strength of that, the consumption of this, and the interest that's in the market, I'm okay with it. FRP plus 1/3, it's in my feature list today. The next one for you, Haraju, is MI6, which is doing very well. I've run that a few times recently. Certainly like the interest, certainly like the developing trend. I like these ones. They mix things up a little bit. Turnaround setups, really, I was going to say really aggressive. It's not aggressive anymore, but it was kind of when I first put it in. I don't think there's anything you need me to add to this apart from FRP plus 1/3, because I think you understand why I'm interested in charts developing in that way. And DRE, which is in the feature list, DRE, that one there, which is in the feature list today because of the, well, isn't that just like the last one, isn't it? It's just like MI6. And I'm going to take 10 seconds to remind you just how damn good my system is, ladies and gentlemen. Holy shit. With sprinkles on top. I mean, this thing was a piece of junk for so long, and until it did the stuff that I tell you it has to do, there was no point looking at it, right? Years and years for this shit. And then it does the stuff I tell you it's supposed to do, and then bang, everybody wants to own this shit now. And it's still shit, don't get me wrong. Okay, let's go to Neil, not supposed to have that last one, but let us put it in, ERD, and then I'm definitely heading, it's worth doing because it has been one that has warranted the addition of risk. Frustrating, I know, frustrating because everything else is going up. Not everything can go up all at once. I don't think there's any candles that are so bad in there. I mean, that's not good, but we're still in trend. We're still very much in trend. We've got a little lower shadow. We're still holding. Like, that's the worst one. That's the get my attention. That's if I'm in a bad mood at the end of that day, knocking a third out. Order of magnitude, that's where we are. We've still got 2/3 risk position on the table. Where would we start to manage the rest of the risk? Certainly beneath there. That is a big no-no. And I'd go even beneath the low of today's candle because today's the demand coming back in. We want to see that demand consistent and continuing. We don't want to see that demand challenged again. Okay, so that's where I'd probably go minus a third, and then I'd have a zero risk position, but otherwise still happy with that one. Okay, moving back up the list, we're heading over to the trading view screen. That's where we're headed, and I'm going to change this so that we will have all our old historical stuff on there, won't we? And we're going to do, there's not many, there's just a Perry and Adonis. Perry's got WELL, which is Well Tower, and that's a really nice chart. Let me zoom out and see if there's anything back there in the corner of our eyes. There isn't anything at all, and it is just a very, very strong chart. Short-term trends, long-term trends, nice little base pattern, price action, then now moving back into higher peaks and high troughs, back to a predominance of white candles, and some nice white candles in there as well. Just very, very consistent. So for me, on that basis, that I can't fault it, on the basis I can't fault it, I must therefore go FRP plus 1/3, click save. Next one is LHX, which is L3Harris, not one that's familiar, but a very, very solid chart for all the same reasons we just talked about. Nothing out there in the weekly chart as well to worry about. That's a bonus. And it's again, it's sheer perfection. I think probably even stronger than the last one. Because we're more motive, aren't we? FRP plus 1/3 on this one. So full risk position if you've got it, not changing that, holding every single share, and it
deserves to be considered for adding new risk among the other opportunities that we are finding. IAG, not IAG Insurance Australia, it's IAMGOLD. Well, there you go, another gold stock to look at here. And our gold stocks, to be fair, I think have been world class, haven't they? We've had some incredible moves. Very good there. Understand that if you're adding risk to this one, which I cannot see a single reason why you wouldn't, it is a magical chart. If you've got 20 other gold stocks already, that's not diversification. Oh, but Carl, I've also got a few silver stocks, okay? Even worse diversification. Oh, but I've got a few critical minerals stocks thrown in there as well, Carl. Don't forget. No, yes, you've got all your dough in one theme, which is just mining, right? Just mining's going to keep going because punters love punting. So please be sensible, or just go in eyes wide open, knowing that you've got a bunch of highly correlated trades. Back in the olden days, I used to write people's trading plans, quite literally. I used to run a mentor program, and people used to pay the price of a Hyundai, whatever a Hyundai cost back in the day. That was order of magnitude. And I'd write your trading plan, and we'd have weekly phone calls, and I'd assess your trades and try and pick through all the shit that people did, and just basically didn't follow anything I said. And that's why I did it for a couple of years and stopped doing it, because I needed a long lie down on a couch after doing that for 2 years. But I did stuff like correlation matrices. So we would actually understand the correlation within the portfolio to get a proper measure of how much capital you actually had at risk, so that we would understand that if we had, for example, 5 gold stocks, that the adding of, or how much risk they were being carried out in the portfolio, they weren't treated as individual trades, they were largely treated as one trade. Now that's a whole world of pain, but if you're clever with spreadsheets and things like that, you could probably start to bring that into maybe your trading as well, if you could be bothered. If you can't, then what I've said to you today is sufficient, is just go into these things eyes wide open. And this, I'm guessing this is another gold stock here, Campagna de Minas Buenaventura, okay. FRP plus 1/3, okay. Yeah, look, it can get really complex, and some of that complexity is actually good. Sometimes you need complex to save your ass. Mostly on the risk management side of things, but the other stuff we're doing here is all you need in terms of keeping it really simple. BVM, I did all yours, Perry. So let's head back up. I'm pretty sure I'm going to stop at Adonis at the top of the list, and we're going to do your US ones there, which were 4Us. I wonder if that's the Uranium Energy Fuels Inc. What are you doing with this one, Adonis? How are you treating those last 2 candles? Are you taking some off the table there, I wonder? Interesting. Maybe a little early, maybe a little pedantic just on those 2 candles alone, but they've got my attention. So I want to see how they play out before I thought about adding any risk. And if I saw a solid black candle, I might just, and all we're talking is a third here, knocking a little bit off the table and certainly hanging on to the rest, because everything else looks good. But that's all I'm concerned about on that one. You can see that shadow developing there on the weekly chart. But otherwise, everything else there checks out very, very well, doesn't it? So very happy with that one. But just wait and see. Now, you've got CJJ, and I wonder, because of that uranium theme that you had, if you weren't going CCJ. Is that what you wanted? I think Adonis is confirming there that he wanted CCJ, which is Cameco, which still looks good. Several of the Aussie uranium stocks have come up in ChartWatch scans over the last couple of months now. NextGen, Bannerman, Deep Yellow are all in there. AEE's in there as well. Gladiator Resources making the list tonight. So there's definitely a broader based theme going on. We've talked about the uranium price and the improvement there. So it's a trend that I don't mind having exposure to. Uranium will frustrate you. It will look great and then it just won't. But we're going to happy to have the risk while it's moving in the right direction. So this one's fine. Again, a little bit of an issue there, but coming back pretty strong. This is a better chart than the last one. But I am seeing a few things that are just causing me concern. Not enough not to do it. Like if you're looking for uranium exposure, I can see why you're looking here. But I'm just worried about why are they there? Why are they selling so aggressively on that day and that day? Like there's when you get to uranium, often there are, as much as there are true believers, there are people that just want to short it too, right? So what about NXE? How does that look over here? I know you can trade it in Australia as well, but yeah, see, there's that. They just do weird things. And even if we go back to their last run, like look how many black candles there were. Even when uranium was going gangbusters, Adonis, it was not an easy trade. Okay, and you've heard me say many times the leopard doesn't change its spots, and it'll be the same funds, the same traders, the same believers and non-believers. It's looking pretty solid now though. It's a tough trade, uranium, don't you reckon? Take some patience. All right, I think I've got everybody's questions answered, so let us head back to the PowerPoint and do what we normally do, which is wrap it with the disclaimer. Very simply, obviously everything is general advice. Sorry if I offended Gann and Elliott wave enthusiasts. If you do know somebody who is a major proponent of Gann and Elliott wave, make sure you get them to watch this video tonight, if only just to watch the expression on their faces as they do. Apart from that, obviously, you could lose money. That would be your fault, not mine. Let's never forget that. Ladies and gentlemen, it's been a pleasure, of course, chatting with you tonight. Hopefully you enjoyed it. I certainly did. All the best for your trading and investing. Until catch up again. Bye-bye for now.